And now we're going to go to Mary and Chandler. Mary. Are you there, Mary?
Hello. Hello, Mr. Biggs. I have 3 questions for you.
All right.
You've called me countless times, and I've never responded, but tonight I had in my heart to respond.
Okay.
My first is I heard you on the way in to work this morning on KTAR about the tax plan, and you were talking about it going retroactive. And when the question was posed to you, how would you pay for this? You said that you would eliminate Obamacare. Well, this is my clarification.
No. Mary, what I said you could pay for it by eliminating the individual mandate in Obamacare.
Okay, but I don't see how that, by you eliminating my deductions, because I'm going to be honest with you, Mr. Biggs, I was a single mother raising my own 2 children. I worked 2 jobs, a 40-hour-a-week job and a 10 to 20-hour-a-week job for over 10 years to bring my children up.
Uh-huh.
And through all of that time, since I've been 18 years old, I've always had employer-based insurance that I paid into. Mm-hmm. So Obamacare came in quite a bit later, and I still have employer-based insurance now as I still work towards retirement.
Right.
And so to eliminate the Obamacare mandate does nothing for me. So
so Mary, can I answer that question before you move on to anything else?
Okay.
Yeah. No, the question that I was asked this morning on the radio was, how do you pay for retroactivity? And we were talking about the plan. So retroactivity has a cost to it because you're paying for it this year. In other words, you would get the tax rate reduction for when you file taxes in April of 2018. You'd get the tax rate reduction for 2017, and you need to either have enough reductions in your spending to offset that, or you need to find a path to have revenue to offset that. So the way to have the revenue to offset that is to repeal the individual mandate in Obamacare. That's $320 billion. $320 billion that the federal government is subsidizing now. That's the point. When that individual mandate were to go away, it's at least $320 billion, maybe significantly more than that. That would pay for the retroactivity. You wouldn't see it personally. It is how the federal government then offsets. That was the point I was making.
Okay, so as if I tried to relate it to myself, you're saying that there's no benefit to me, but it is federally. Is that what I'm hearing?
No, the benefit to you would be the tax rate cut. The benefit to you also is that the federal deficit does not increase because we're cutting your rate and applying that for 2016 taxes.
But if you're taking the deductions, let me give you
deductions.
You're not taking the medical deductions that I have to pay out above and beyond my employer-paid insurance.
I think let me be okay. So we're talking past each other, apples to oranges. The question I was asked was generically, how do we do it without creating more federal deficit? You're asking about a specific portion of the tax plan, and you're right that in the tax reform plan that's out there now, medical expenses, not deductions, but medical expenses that you get right now. You get, if you pay over X amount of dollars, you get a deduction for your medical expenses. In the current House plan, that would be eliminated. That is correct.
Okay, so the percentage that I pay above and beyond, and that I get a deduction. So I can't remember the exact amount. I want to say it's 20% of my income. If it's above and beyond my household income, I will no longer have that deduction. Is that correct?
That is my understanding. Yes.
Okay.
I'm not talking about the number, but just, yes, the generic, that deduction goes away. That's correct.
Okay, and the mortgage interest deduction?
Stays in. The mortgage interest deduction stays in.
Okay, income tax. You know how at the end of doing your taxes, you get a deduction for a standard deduction for what you paid in income tax. Where does that stand?
That you're talking about the state and local tax. Right now, that goes away, but there's some movement there. I'm not sure what. I've been told there's going to be an amendment there, but I haven't seen it yet. But there is, for property tax, you still get a deduction up to $10,000.
Up to $10,000. It's a deduction, so it's not a. Okay, all right, I understand. I do understand.
Yeah.
Okay, I understand what you're saying because I do my own taxes for the household. And
now, one other thing, Mary, I would say that is an interesting offset that may which is designed to overcome some of those issues that you just talked about is the standard deduction is being doubled. So as a single head of household, normally you get $6,000. Now you're going to get $12,000. So that first $12,000 will be tax-free. What
about married joint filing?
Yeah, it doubles as well. So it doubles to right at $24,000. Yeah.
Okay. Because when I heard that, I thought, wait a minute. All these years I've been legitimate and I have paid my taxes, and I was in business for a short time with my former husband, and we were a sole proprietorship. But I do know that income tax on corporations is 35%, but there are a ton of tax write-offs. You pay yourself. You also write off your insurance, Social Security, depreciation, and so forth and so forth and so forth.
Right.
Okay.